very open operation and kind of bounce everything off each other. So I've been in this business about 20 years. Really enjoy it. I like to work in the industrial space, mostly in the San Gabriel Valley, and it's been a fantastic run for me. Looking forward to an interesting time in these next couple of years, but it's going to be a time that, you can really do well if you're out there and charging hard.
Thank you, Alfredo. All right, now can we have David Chen from Sperry Commercial Global Affiliates come up and tell us a little bit about himself?
Thank you. So David Chen with Sperry Commercial. I actually won't be there that much longer. I'm going to be switching to Lead Associates in Pasadena. So if you want to contact me and you have my number, you can still do that. But my background, I came from development and consulting in commercial real estate. Started brokering about 8 years ago. I mean, I love it. It's probably what I'm made to do. So, super happy to be a part of the Arcadia Association. That's kind of where I started. I've also worked as the chair for the commercial committee for 2 years in the past. I've also been president for CCIM. Greater Los Angeles, currently the president for the Asian Real Estate Association of America. So, I do like doing nonprofit and charitable work. I do specialize more in retail, more specifically in leasing, but I am a generalist and I do all that good stuff in this area, San Gabriel Valley, where we all reside. So if you have any questions regarding any of that stuff, feel free to contact me and we'll be sharing some good information soon.
Thank you so much, David. All right, now let's have Robert Ip from Coldwell Banker tell us a little bit about himself as well.
Hey everybody, my name is Robert Ip. I'm with Coldwell Banker Commercial. I've been doing commercial real estate for about 10 years. And prior to that, I was an IT consultant, so probably a lot of us all have varied backgrounds. I love real estate. I do sales and leasing. I help owners find buildings for themselves. I do student housing. I do multifamily. So, like many of us here, we have wide breadth and also depth. And so I think I can speak for all of us here that all of us love doing commercial real estate. I work primarily in the San Gabriel Valley, and but I will travel anywhere. So looking forward to meeting all of you guys. And like David said, if you ever have any commercial real estate questions or any questions in general, love to talk to you and meet you guys.
Thank you so much. All right, now can we have Nick Zigic come up and tell us a little bit about himself?
Thank you. Let's have a seat as we are called up. So, yeah. My name is Nick Zigic. I've been in real estate since 2004. Prior to that, I've worked for a couple of large real estate companies, like 99 cents only stores, which is like a retail chain, but it's actually a real estate company, like McDonald's, and Cornerstone Properties, which is Blackstone, merged into Blackstone. So the large ones, and learned a bit of negotiation there, and went into commercial real estate. I switched because there was a lot of commercial brokers at that time to business opportunities, and I mixed the commercial aspect and the business opportunities because they're tied in very frequently, and most of my clients don't get to sell their restaurants or businesses, and the landlords end up leasing that space, so that's where I pick up leases. Thank you.
Thank you. And finally, can we have Mike Dechani tell us a little bit about himself?
Hey guys, Mike Dechani here again. Like you said, we all do a lot of things in commercial real estate. I do a lot of things in a lot of fields. I have two offices, an office in Monrovia and an office in Irvine that covers basically the greater LA area. Our office focuses on numerous different things from land to development to investment property and other general commercial stuff depending on the area. My background is I grew up in a real estate family, the residential real estate family, learned that world, understand that world, and still love that world. But I got into commercial real estate and worked for the Lewis companies. If you guys don't know who the Lewis companies are, they are a multi-billion-dollar family-owned company in the Inland Empire that developed most of the Inland Empire. Think Terra Vista, think the Target Center on the way to Vegas, think of Sierra Lakes, think of the whole Chino Preserve, think of all those things that you see developed on there. I worked for that company, and when I was with them, it was acquiring that land in order to develop it. So I got my experience there, started my own company in 2007, and we were a small firm of between about 5 people to 7 people at a time, and just focusing on the client first. And ready to give you guys more information. Thank you.
Thank you, Mike. Can we have a round of applause for our speakers? So we're going to have a couple of questions for our panelists here. First, we'll start with what is the state of the market, whether it be retail, warehouse, office space, business, and land. Would anyone like to start?
We're also probably going to say a lot of the same things in the sense that it is a changing market, and when the interest rates do go up, everything changes, especially commercial real estate. Commercial real estate is highly affected by rates more than residential real estate is. And it's the same thing for land. Land is the basis of all real estate and is, commercial, it could be development, it could be industrial, it could be anything, but land is the basis for that. So what we see happening in the land world, you will see a drop in values of land because land is speculation. It has the most risk of all the categories, and therefore you also have the biggest drop. So if you're selling land out there, depending on if it's prime land or land that's maybe entitled or land that could be entitled, it's all about looking at what the next 3 or 5 years, what's going to happen. Most of the land out there will probably have a correction, depending on the areas. I would think anywhere between that 10 to 40% range, depending on where you're at. More the high desert will probably be higher, and around here it'll be much smaller because you don't have a lot of vacant land. It'll be more redevelopable land.
All right, so the state of the market in industrial real estate. I've been reading a lot on exactly what Mike was saying, interest rates. I think that's the elephant in the room. Interest rates are going up. And even though interest rates right now, we're looking at 6.29%, I think is a 40-year average for interest rates. 6.49 is a historical average. Right now, we're at 6.29. So we're actually below what the historical average is over the last 40 years. So yes, we've been blessed with some really great rates and prices have gone up. But now, everybody's got this hangover after the party. And everybody's trying to figure out, what are we going to do? How are we going to sell these properties at 7, 8% interest rates? Well, look back to 1981, and I think we're at 18, 20%. And was the market great? Probably not. I wasn't selling real estate back then, so I can't tell you. But we were there, and we got through it. In industrial real estate right now, we've had this incredible demand for properties, especially the high Q properties, because it's logistics. So it's all based on logistics. People are moving a little bit away from brick and mortar, move to online shopping. So we've got I believe the low that I saw was about 1.2%, and that's from CoStar. Thank you, Dennis Lee. There you are, over there. Okay, sorry. Anyways, and 1.2%, that means there's nothing available. That means as soon as somebody moved out, somebody else moved in, and you've got multiple offers. I think that's going to change, and it's right now, we'll see a little bit of change. I think the interest rates are going to make a difference. Anyways, I tend to talk a lot, so, Robert.
All right, can I get a show of hands of people that know someone that works from home or is working from home? So, all right, so that's pretty much a lot of people. And the reason why I asked that question is that has changed the office market for the foreseeable future. And so what happened during COVID or the last few years, the office market was totally devastated. But what I am seeing anecdotally, in talking to friends, talking to people, is that companies are asking people to come back into the office 2 days a week, 3 days a week. And that's I see that coming back. Because truth be told, yes, people are productive, but people bosses, companies want to hold their employees accountable. So they want to be able to see them in the office. So that's one of the stories. But the second story is that because a lot of people are still working from home or having a hybrid, you are going to see that these contracts are still expiring or coming up. So people will either most likely relocate, downsize, maybe get rid of their office entirely, which I don't foresee that really. Some people did that, but I think some people will actually, some of the companies will start actually getting office space. So what does that mean? It says the office space is still a big jumbled jumbled market, jumbled industry, probably more on the down than on the up. From the leasing perspective, that means your clients, your tenants, they can get good deals. So what that means is you can ask for more TI allowance, tenant improvement allowance for them to fix up the offices. What that means is you can get more free rent, and that also people can be more flexible on lease rates, landlords. The second thing from a sales perspective is we are seeing owner-user offices typically go for a decent amount of money, not a huge premium, but if you're trying to buy an office investment, that we're seeing higher returns on investment, higher cap rates to account for that risk of that uncertainty in the office market. So that's just a little bit of a summary on the office market. Love to answer your questions afterwards.
Business opportunities, well, since I specialize in restaurants, but business opportunities are not only restaurants. So there's all kinds. I sold milling operations, I sold retail, I sold restaurant, nightclubs, and so on. So they all have a different aspect to it. On the restaurant side, though, it is a buyer's market. Since the pandemic, restaurant owners went either out of business or they collected massive amounts of money from the government on their employees and are reopening new offices, new restaurants. So you can see some restaurants kind of closed. They're just delivery, what is it, DoorDash delivery thing. But at the same time, they're just using the opportunity to cut the employees out and make more money on the back end, and then use that money to expand into other operations. And you can see that actually throughout Monrovia, Myrtle, happening constantly. And on Lake and the Colorado and Pasadena. But on the other hand, the guys that are not floating as well as those are losing their businesses because now employees don't want to work anymore because they were used also. So it's totally a devastation in trying to find employees in the restaurant business. So I was at a restaurant in Orange County over the weekend, a friend of mine owns. They're doing good as a pizza place, but his whole family came on Sunday to work because the employees quit. So like, oh, it's Sunday. So they were all there scrambling to get the pizzas done and so on. And he said, like, you know what, they just like, one is sick, two quit, nobody wants to work for, they would want $50 an hour probably. So that's the state on this end.
Okay, so when it comes to retail, I look at it in multiple ways. So one thing is comparing it to pre-COVID and currently. So pre-COVID, things have already started shifting within retail, going more towards service, less towards generic, let's say shopping for clothes, etc., with what's considered standard retail back in the day. So it was already transitioned to service because of all the online shopping and all that good stuff that Alfredo talked about. So the shift was already happening. COVID expedited that shift to force it. And ever since, the retail sector has already been correcting. So if you look at what's happened post-COVID, it's still been pretty stable. Vacancy rates are stable, rents are stable. Transactionally, it's a little slow. And when you look at the transactions, it's a little bit different than what you would see in the other sectors. People are buying retail centers to tear them down to build multifamily. You're not buying a retail center because it's a good investment anymore. And that's currently the case. It may not be the case in a year or two. That trend might slow down a little bit or speed up a little bit, I don't know. But at the moment, that's what people are looking at retail for, and more specifically, even in the Inland Empire. If you have something in LA or Orange County, usually it's a better investment. The Inland Empire ones are starting to, their vacancy rates are a little higher, their rents are significantly lower, etc. But overall, it's pretty stable. So if you're looking for a good deal on retail, it's not really there unless you're really able to operate it and actually squeeze out the extra return yourself as either a manager or you have tenant in tow or you can do the lease-up play. That would be the strategy. And also, there's not that much more new construction in retail. Whatever new construction there is that's like in the books or planned for, they're usually required by the city to replace the retail that was purchased and just torn down to build multifamily or whatever megaplex downtown or whatever it is. So the retail expansion is just not there at this point, and it's stabilized. So yeah, that's the gist for retail at the moment.
All right, well, thank you. I know you all kind of touched on the state of the market. How do you guys keep your clients' expectations, seller, buyer, realistic, especially during this time, during a recession, or especially during COVID as well? How are you all managing that with your clients?
I'll take that. So the question is, how do we manage client expectations? Well, it's very similar to what you guys do. Communicate, communicate, communicate. And whether that's good news or bad news. And so when you do that, sometimes to their dismay, like, well, did we miss the market? That was one of the questions I got asked. Did we miss the timing? Yeah, maybe. But you just tell them. And because you don't want to tell them something that's not true. You don't want to be Pollyanna-ish. So my take is that we just got to keep in front of our clients, keep in communication, even during the bad news. And by doing so, they respect you and you're able to keep them as a client. What you don't want to do is not communicate right to them and say, Robert, what's happened? And, oh, well, I've been doing this and this and this, which is totally true, but they don't know about it, right? So, like when you guys show a house, your seller might say, how's the activity? But almost every time I show let's say I show a property, I'll just text hey, I just showed someone through. They're not interested, or they might be interested. So that's I think what the key is to both commercial and residential real estate.
Yeah, I'll take it also. This is a great market for one of my, shelved comebacks on what the market is like when clients ask you, and it refers to the residential market pretty much, because it doesn't. These rates do not reflect very much of the investment part or buyers of restaurants and stuff like that. You want it or you don't want it, but the prices have never been lower. I mean, as far as in the property. And would you rather buy a property that's right priced with a higher interest rate that you can adjust in 3 years, or overpay for a property that you need 10 years to compensate its price for at a lower interest rate? So it is obviously a good thing to buy, to negotiate the lowest price possible, no matter what the interest rate is. And you should always, this is the moment where that actually really plays. As far as the business offer, you have the buyer and the seller, and both of them have false expectations. The seller always wants to sell their baby, and the baby is worth more than it's worth, and all the sweat equity they put in, they think it's there. But like for example, this restaurant, this vacant restaurant in Pasadena, they put $1 million into it, and they closed, and they want $300,000 out of it. Would you pay for something that is not fit in your business plan for a restaurant? $300,000 of the stuff that you'll have to demo and take out and put your stuff in? So it's worth nothing. It's worth maybe a few refrigerators that you can sell, maybe a hood and a location, a good lease, but not the restaurant itself. As far as the buyers, they will always like to pay nothing for something. So you gotta bring them up to the state of the market and be firm with it, because otherwise you'll be working for a person that'll never do business with you. You want to say something?
Wow, Nick, you just stole everything I was going to say, so that was very good. But I just wanted to bring this up again. I presented this earlier, and I've got a seller that's got an idea of what his property's worth, and maybe it was worth that at the top of the market, but it's not worth that now. And trying to manage that expectation now, it's that hangover after the party. You know, we all have this idea that we're going to do great and things are going to be fantastic, but you have to communicate, as Robert said, and tell them, hey, look, it's not that market anymore. And some sellers will take a while before you can actually, they'll listen, because they have this belief that there's that one buyer out there that's going to buy it. And maybe there is, but sometimes you just got to take reality and just tell them what it is and do your best to sell the property.
Yeah, so I mean, one other thing I tend to do is do more research and give them the numbers, give them what's out there, give them what's current. Sometimes they don't want to necessarily see that. They have someone, their uncle or their aunt told them something that someone else did, last year, and that was the high of the market and that was the best deal ever, and that probably wasn't actually even closed, but it was like a verbal offer that someone gave in passing when they were drunk, So you just have to give them the reality and, like Robert said, communicate. I try to keep it straightforward and based on numbers and research, so that I guess that's just what we do, and also it saves me time, because going back and forth with big stuff just doesn't make sense to me. But keep communicating and keep talking to them, so when they do come to their senses, we can get something done.
Each product class is so different, so really you have to get into what your product class is, because that's what really affects the market. And it is different. Retail is going to be different than office and industrial. And industrial is so low vacancy, even with these changes, it's still pretty strong compared to what retail would be, because they're converting it over. When it comes to land, there's so many different factors and expectations. It's really the expectation of what they want to do with the land, and it's a speculation land. That makes a big difference in how you approach the mindset of your client. Because if you're buying for a long-term hold, a lot of spec land is very different than if you're going to be using it in the next 6 months or a year, and will you be able to do the development? Honestly, in a bad market, in terms of rates going up, that land may be a better time to buy it, because maybe you're paying the same price, but now the cost of everything else has gone down in price. Maybe your entitlements have gone down in price, and the cities are not as busy, so the entitlement process can go much faster. So it's setting the expectation of what they want to be done with their product class, and then figuring out how to make their mindset go around there with the economy the way it is.
Thank you. So now you have a client, you have the seller, the buyer, they're coming to a deal. Now, do you want to explain what happens during due diligence? What exactly are you checking on these properties? And also, why do commercial transactions take so long, and setting those expectations for your client as well?
So, I mean, at least in retail, it probably doesn't take as long as land. If you're doing development land, that takes forever, and I'm sure Michael will get into that. But with retail, you run through all the leases, make sure what type of lease they are, how long they are, you go through a rent roll, you see what type of, if it's triple net, modified gross, and obviously you need someone like Adi to do the phase ones and hopefully not the phase twos. Inspections, you want to see, if there's any leaks or any deferred maintenance, all that good stuff for shopping centers, the parking lot, all that, those inspections. But it doesn't take it's not like land that takes a year or two in due diligence. You can probably get this done in hopefully 60 days and 90 days.
Business opportunities. I wish I did residential, because my statistics is listing 20 to sell 1, and hopefully. But you have if you're making a business listing, unless you're really lucky, because luck really plays in this. Usually, people find about my listing like 3 days after the listing expired, playing golf somewhere with somebody. And you put it on, it's not like the MLS that everybody goes to one spot. It's random. I pay 3 different services, and I charge the clients up front for those because I would go broke if I would pay all those out of pocket at the 1 to 20 rate. So that you just need time for the word to get out and to reach the right people for the business to sell or to get an offer at all. On the buyer side, the statistic says that 1 out of 2 buyers will buy something they didn't hire you for. So they hire you to buy a restaurant and they end up buying a machine shop or something like that. So when the buyer comes to buy something, that really doesn't mean that. You really have to, like Robert says, communication. You have to do everything you can to find. I compare it to the residential market where you actually take the buyers around the houses and then kind of just watch them from the side to see what, spins their wheels. Where is it outdoor, inside, the closets or the kitchen. Here too, it's just the type of business they're in. It's not might not be the restaurant. It might be something else. It might be a daycare center or something like that. So it is difficult to locate that. But once you have a buyer that's focused in on a deal, it's rather quick. You have 28 days of listing it, or actually, would be. There's a certain time you have to post that you're selling so that you can. Well, that's where escrow actually comes in. Once you have a buyer and seller, in my case, a good escrow company like Escrow does bulk sales, I don't have to think anymore. They do it all for me and it's covered.
So in regards to the length of an escrow for commercial, one thing that we all have to contend with is actually financing. So and different types of financing will take longer. So for example, in the last few years, SBA financing was really, really popular. And so as a result, the Small Business Administration was getting inundated with finance requests, loan requests, and they had to approve those loans. And that can take a long, long time. That gets really frustrating for the seller. And it's actually entirely out of the buyer's control because they shoved it into a black hole for the financing, and they kind of know when it's coming back, but it can take a long time. And most of the time when we're writing contingencies for SBA financing, we're looking at about 60 days just for the approval itself. And then it would close anywhere between 15 to 30 days afterwards. So that's a total 90-day escrow. Financing now, still from a commercial standpoint, is still usually longer than most residential loans. So that's usually anywhere between 45 to 60 days.
All those are great topics that they covered. The one that I've come against is governmental approvals. So you find a building, you think this building's perfect, and your client loves it. Well, you have to go to the city. Can we actually move into this building? Does it have enough parking? And do I need to get a CUP? And CUP, I mean, that may be the kiss of death, because that could take 2-3 months to get. And the cities, it's got to go through planning, and then it goes to building and the fire department, and then it has to go to the planning and for their meetings, and then finally it goes to city council. So they only meet once a month. And so if it takes 3 meetings, you're at 90 days if you need to go through a full CUP. So that is the one thing. I mean, there's so many things to consider. The loans, business opportunities, the retail leases. I mean, that's another thing. But one thing I found is you have to have a really good relationship with the city planners and know which planner to take it to. Because if you just go to the counter, forget about it. They're going to tell you no. That's the first thing they say. So you have to have a good relationship with the planners and able to get to the right person so that you can actually move this thing along.
When it comes to land, everything it says true, but it's due diligence on steroids. One thing is land all goes back to, again, what you want to do with the land. And so during your diligence period, a lot of time is spent figuring out if you can do what you want to do with that land. And that can take time. It's called the entitlement process. And you can close land quickly if you wanted to, with a lot more risk, or you can reduce the risk by going. You can reduce the risk by going through further the entitlement process, hiring your environmental person to come out there, hiring your historical person, your biological person, hiring your soils person, hiring your engineer, and all these different people. And you can spend more money or less money. And during this process, we have something called a land buyer's checklist, something that I created really for my clients, but I learned this when I was doing land all day long. And that land buyer's checklist can take anywhere from 30 days to really, on average, 6 months to a year for due diligence. Now, if it's an infill piece of land, a piece of land that's like here in Arcadia, and you got 20,000 square feet, it's much faster to go through that process. The risk is a lot less. You can get some answers much quicker, but everything that Alfredo said is true. You have to go through this process of approval, and now you have 10 more processes of approval. I sit on the planning commission in my city of Monrovia with our city together, and I see a lot of different projects, and anything that has to do with land takes a lot more time. But in this area, most of the due diligence is going to be buildings that are being torn down and redeveloped, and using the land as the basis for that, and those go faster. But raw land and land that's further east, going with acres of land as you go down to the Inland Empire, those take a lot longer to make the projects work. So think about the due diligence time zones being between really an average 60 to 6 months. I've had some go as 2 years. Think about the idea of financing is not as a big issue as much during the due diligence process, because you really don't have a lot of options for financing the land. It's going to be seller financing or private financing. Banks don't really come in there and finance you. You may be able to collaterate against some other property you have, to get some bridge loans and that kind of stuff. But the reality is the value of land differs so much that you can't even have comparables just right next door to it. It really depends what you're going to do with that property. Thank you.
Perfect. Mike, you actually hit my next question. So how do buyers finance these type of transactions? You mentioned a little bit on land. Does anyone want to elaborate on any other type of financing for your commercial investments?
I can just say that a lot of the industrial properties that I deal with are owner-user, so it's going to be an SBA 504. A lot of times I'll go to my friend George here in the front, Sevilla with Citizens Bank, and he'll help me out and let me know what I need to do. But conventional loans are probably about 30%. An SBA 504 is, 10% down. So that's a really good opportunity to go into a building and save some of your capital, because you may have to do TIs and, buy your inventory. And if you spend all your money on your building, you lost all your horsepower.
In my case, it is possible actually to finance. There's two, there's mom and pop stores that are for sale, and there's real businesses that sell. By the way, there's a saying in our industry that a business is a good business to buy if the owner died, because everything else is a lie. Or partnership breaks up, something like that, but that's the death of the owner. So everything else is like, the reasons for retiring and so on. Now, if the business is real, I try to pre-approve it on an SBA loan based on its papers. So I would send the books from a third party. So if business is real, they have somebody else doing accounting. That accounting firm would send it to the SBA. It would be a breeze to pre-approve it for SBA loan. Then it's contingent only upon the buyer being qualified for that loan. So, and I try to do that up front before listing, so I can put that into the listing. And that really raises the value of real businesses. And usually those businesses are $300,000 and up. There's a benchmark there. If all other businesses are cash or carried by owner, I ask all my listings to consider the option of financing up to 20% off the listing, so that if they reduce the listing price or the cash required by 20%, and then the 20% they can take on a note using the home of the buyer or some kind of collateral to collateralize that 20%. And it usually pans out. It's usually a 3-year loan, and the business usually stays 3 years in business paying that loan off, so that the buyer can actually reach the maximum amount of money to receive, and pays less taxes because they're not receiving the full amount in the same year.
I mean, so you have your traditional forms of financing, conventional loans and SBA financing, but sometimes you have to get a little more creative. Maybe the buyers can syndicate, or they have a fund that they've created, maybe friends and family network. But also, a lot of these transactions, at least what we see in retail and probably in office too, you're going to see a lot of 1031 exchanges. So that's also, it's not exactly financing, but that's how they pay for it. So, things to consider, their level and their size of business. If they're individuals, whether they're family office, institutional buyers, all that, it's going to be different. And a lot of the bigger ones, they already have their financing together, so you don't really have to worry about it.
Last kind of financing that I just want to mention, kind of last resort, is hard money loans. And so those are just usually much higher interest, shorter term, and they collateralize against the property that you're trying to buy. And that's just another option.
Just to piggyback on land, typically, if it's not cash or a 1031 exchange, it's going to be owner carried, seller financing. Maybe you put down 30-40% down, and the seller will carry the rest. Otherwise, you got to find other ways of getting that funds, and that can be from, like I said, third parties, or thinking outside the box and using the equity on other properties to use on this property to buy it, or using some other kind of ways of thinking to make things happen. But you don't typically get typical financing unless it's like a single-family residential lot and you're building a house on there. Yeah, and yes, you can get pretty easy financing on that. I know some banks do that, but typically most of the commercial stuff where you're doing a lot more development, it's not that easy to do. You just got to really be creative in the way you do it.
Thank you. So now, keeping in mind, we've had a pandemic, we're dealing with high interest rates, now we have inflation as well. How do you help your clients determine if they're making a good investment? Because ultimately they come to you and ask for your opinion as well.
It comes back to just understanding your clients, their goals, their financial objectives, and their retirement goals too. If for land, again, it really is time constrained. Every day you wait on that piece of property that you hold is a carrying cost. And with land, the longer you can take to close a transaction, the more things you can satisfy before you close that transaction, then there's less risk and the carrying cost goes down. So if I understand what their mindsets are, then I get to understand what are the financial risks and what the goals are and how they can get there. And that's kind of how we work with them and figure out solutions. It's always about a solution based. It's everything based on time.
Well, I really had to think about that question. I think it really matters. Why are you buying this property? Is it an investment? Are you an owner user? Do you have to have it? If you don't get this property, is your business going to go out of business? So what is a good investment? If my business goes out of business because I didn't buy it, maybe I made a bad investment. I didn't buy it. I didn't go through with it. So it really matters on what your requirements are. You have to ask your clients what their needs are. Because right now in this market, it's not an investor market. Prices are very high, and sure, you can go out and buy a property. Once again, I'm going to come back to this. Is that a good investment? I don't know. That's something that you have to work with your buyer to figure out, and look at what the cap rates are today, not historical cap rates, today, and what are interest rates, and what are his costs going to be, and what's his end goal, what does his retirement look like.
I'm just going to be repetitive. It's all about the goals of your client, whether they're the seller, whether they're the landlord, whether they're the tenant, whether they're the buyer. It's about them. It's not about you. Whatever we make, it's a side effect of by helping them achieve their goal. So really, we're just trying to gather the requirements of what they're trying to accomplish and help them achieve that goal.
I make it very simple for my clients as far as the sellers. The rule in business ops is the business is worth what somebody would pay for it. So forget those multipliers and all the research. I tell my clients you can put it up for $1 million. If their phone doesn't ring, we've got to do something about it. So, and I never give advice on it because in business ops, the buyer can burn the business down in 3 months. So it's the buyer that runs the business from the point of sale. So if you're a pathetic seller and then all the staff leaves because they don't like them, it's too bad. They just bought something they can just close. So I stay out of any advice on the business model.
Yeah, beyond, I mean, obviously everything they said is correct. It's kind of what your client's goals are, but also if your client actually knows their numbers, you can demonstrate to them whether it's a good buy or not. Like if they're a larger institutional buyer and they know what their discount rate is for their business, you can tell them if this purchase is going to be better than the discount rate or worse than the discount rate. Obviously, if it's worse, you don't buy it. If it's better, then you buy it. You can also do lease versus purchase analysis. All this stuff, I mean, you can learn from CCIM, so I'm going to plug that a little bit. So if you guys want to get very technical, which I think it only really matters at a very high level with the larger institutional landlords and REITs, etc., and maybe some family offices, that is actually very beneficial. But with mom and pop and maybe a wealthy individual, those all don't matter. It's really about what they want to do and what you can get for them on the market.
That's a question.
Can I just make one more comment? When I said it's not an investor market, I was talking about the marketplace, like what I work in. Anywhere buildings anywhere from 5,000 to 20,000 square feet. But if you're looking at logistics companies, big warehouses, based in the Inland Empire, those are still, trading at good numbers, and they're making money for the buyers. I mean, you wouldn't have Blackstone or any of these big companies buying these if they weren't making money for them. So it's a tough investor market for the market I serve.
Somebody had a question.
Thank you. Yeah, let me go give you the mic.
Oh, no, we did.
Oh, you can, okay, go for it.
Okay. Question, just to piggyback on that, do you guys feel like some of your maybe, I would say like more average size deals, you have to loop in, their CPA, maybe their financial advisor, and I don't know if you guys can maybe just share some of that. Mine's more specific to medical practices, for doctors that are looking to grow their practice and acquiring other smaller medical offices under 50 employees.
The answer is yes. I think in general, in commercial real estate, whether it's land or anything else in commercial real estate, in my office, we do all different types of real estate. We always almost involve their financial planner, their CPA, their lawyer, whoever their consultants are that they use on a regular basis, they're involved in that. Some of the smaller investors don't, smaller users or owner users or even doctors don't have those people that they support them, and then we give them our database about people because that's why it's important as one thing is if you're a commercial realtor out there, build your database because that database is what's more important for your clients than anything else. You are the resource for them. To answer the question, yes.
Oh, sorry, just to piggyback on that. Do you find that maybe there's a bit of a pivot, considering, I'm having some conversations with accountants where they're like, I don't want to get into that based on what's happening in the stock market. Maybe if you guys can maybe share some stories of how, like, maybe clients have been scared about getting into the market because of the crypto market as well as the stock market.
That's a different question, but if you have somebody you already trust as your consultant, your CPA, that person should have no problem getting involved in the discussions because they know you more than everybody else because they've been doing your finances for a long time. Otherwise, maybe that person's not the right person for that job. Everything else, that's a different discussion which we can save for doing at the end because we'll be talking about things that are not on our list.
I was just gonna say, any deal that I've ever done, you know, you try to, look, we're just brokers. We're not attorneys, we're not CPAs, and we get in a real big trouble by trying to play that role. So you have a lease transaction, a purchase transaction, you tell your client to go and have their attorney review it. We can't review it for them. That's not our job. Our job is to put the deal in a place and work the deal, not to be the person that, you know, looks at the contract and tells them what it means. You know, we can advise them a little bit, but you gotta be very careful.
Great question. That was really good. I think that's spot on everything that they answered. It's a very fine line with everyone. Now switching back, what should an agent do right now if they want to get into commercial real estate? Do you have any advice for them?
So I might be the newest agent here on the panel, so maybe I would say the best thing to do if you are serious about it, I mean, there's different levels of seriousness, in my opinion, that I've seen. Some people are already strong in residential and want to do occasional commercial deals. That's different from what I'm trying to explain. I'm trying to say if you're going to go all in commercial brokerage, not like just dabble in your own investments or do one here and one there, but if you want to be full-time like we are, join a team that's strong that will take you on. There's very few opportunities to get educated in this field. You know, I don't think there's much traditional education in college for commercial real estate and real estate in general. There is CCIM, which I'm gonna plug again, for getting your base knowledge, but join a strong team that is willing to mentor. That's probably the #1 best thing you can do. If you can't do that, go get educated, come as many of these type of events as you can, study on your own, get out there, you know, do the transactions, and you know, try to work with as many honest and good professionals as possible, or partner with them on transactions, and don't be just grasping onto that first, you know, hopefully big commission. Just share it and get the deal done and get that flow.
I'm a broker, so as a broker, we have agents that do all kinds of deals, including residential and other commercial types. But as being active with AAR for 20 years almost, and being on this committee, on the commercial committee at AAR, we have developed programs that are really good, I think, for people that are in residential real estate and want to dip in commercial. So if you just follow the AAR calendar and attend those commercial classes, they are what we call in our office residential training. So residential is a category, and there's a lot of residential agents that do occasional commercial deals. But you gotta know your stuff, especially, you know, if you're working with a real commercial broker like Robert and people like sitting at this table. You gotta know your forms, you gotta know your lingo, otherwise they'll not want to work with you. So mingle with the commercial brokers, attend these at the events with the real commercial brokers so they know your face, because it's interesting. Robert and I met each other in person just a few days before this flyer was made on a deal that we're still working on and should close this week. And here we are sitting together. but you got to know your people, because if they don't know you, they will not trust you. And agents and brokers should trust each other when dealing, and you should know them. So that's a good first start.
Yeah, I just kind of want to piggyback on what David said, and you really got to find a good mentor. Otherwise, you're just kind of floundering around there if you're trying to get into commercial real estate. In that person is going to help you lead the way, and you might end up doing a lot of what I would say kind of runner tasks, kind of gopher tasks. But those gopher tasks actually help really lead you and teach you on how to approach commercial real estate from that standpoint.
If I were going to get back into commercial real estate, and I was a newbie. I didn't know anything about it. First thing I'd figure out is, where are the meetings? Where can I go? And I would start looking at LoopNet and CoStar to see what's going on out there in the market. You know, what is the stronger market? And most importantly, I figure out, what part of commercial real estate do I want to get involved in? I look at, when you say commercial real estate, I look at it as kind of the trunk of a tree. And then you got branches, you've got industrial, you've got the office, you've got land, business ops, retail. And once you go to, like, let's say industrial, you've got cold storage, you've got logistics, manufacturing. There are so many different types of commercial real estate. You got to figure out, what part of that do I like? You know, if you're gonna be an office guy like Robert, you got to wear a suit. You got to be dressed up, because the people you're going to talk to are going to be in suits. If you're going to be an industrial guy like me and you're working with buildings anywhere 5 to 20,000, I can wear a polo shirt, because a lot of those guys are going to be, if I'm visiting those industrial buildings on the weekend, I might even wear jeans, because a lot of those guys are getting their hands dirty and working. And you don't want to show up in a 3-piece suit to talk to them while they've got their hands deep in the grease, you know? It just doesn't, you don't make a good impression on them at that point. Anyways.
Reminds me of a story. I wore boots because I was buying land in Chino, and it's all cows. And so, yeah, I wore jeans and a t-shirt, and I came home smelling like poop. It was all about dealing with manure, and the transfer of the manure off the property, the contamination of that manure, in order to develop that property. Anyways, that's another story. My wife reminds me that all the time. It's all about the education, which we brought up already. It's all about the support in your mentor group, which you brought up already. And it's all about how you network. And then also the fourth thing is just the organizational side. I'm actively involved in the organized side of commercial real estate. So at the national level, I'm the chair of the commercial committee next year. And I'm also in the AAR Aspire program, which is a mentor program to help people get better in the world of real estate. And I'm mentoring somebody right now who switched from residential to commercial real estate in Pennsylvania. And these are the questions that I get asked every day. And it comes down to being involved and finding your path and making sure the most important thing you are is that if you're going to do it full time, you join an office that gives you support and the broker that's going to support you and is going to walk into the process versus just letting you sit there and learn on your own. And what Nick said earlier, part of the Arcadia board of the commercial committee, we spent a lot of time in the last 10 years creating programs for people to help that. We have databases stuff in the library which can be borrowed, programs you can take home and actually learn every category on your own that we bought for all of us. And then all of us here are mentors and can help you with questions. We all teach classes out there. I teach a lot of different commercial real estate classes, from land classes to other type of classes, and I get calls all the time from people I've taught in the past just for advice. And usually people that are more experienced in the industry or have been around for a while, they are willing to share the information if you ask them the right way. But if you come off too hard, or you want too much information from them, or too demanding from them, they don't want to help. But if you come in asking for information, maybe ask them to go to coffee or tea or a drink or happy hour, you know, they are willing to give it time because they want to give back. People that have experience want to give back because that's kind of what you do in your career. You get really good at it and you want to help others. So follow that path.
Thank you, everyone. What is the #1 mistake to avoid when handling your first transaction?
Can't remember.
I think it goes back to what we said before. If you do not have the experience in that category you're working with, you need to team up with somebody. And it's worth co-oping or referring out or learning by joining up with somebody or referring the deal out. Because I get that all the time. I get people call me all the time because they're doing their first land deal or the first commercial deal and said, you need some advice. And they said, Mike, can you just give me some advice? I said, sure, I can give you some advice, but to start, you shouldn't do this on your own because you're putting yourself in a predicament because you're doing something you don't do every day. And if you know what licensing law says, if you haven't done it before, it's your future responsibility to have done it before. Therefore, you must team up with somebody who has the experience, otherwise you're in violation of your license. So on your first deal, if it's first commercial deal, make sure you're teamed up with that person you're with in your office. If you're in a commercial firm, then you should be teamed up with someone in a commercial firm. Do that first deal with somebody. Share the commission, learn from them, and move forward. The second deal, you can do the same thing. Third deal, you do the same thing. But that's what the fourth deal, you can ask them for advice without sharing the commission, and they'll help you because one, you were involved in deals before, they made money together. But two is you have the experience now, and it's no longer just holding you the whole way. It's just helping you answer questions. And for all the people that I've mentored over the years, the first few months are the hardest. After they take the information and they do it on their own, it's a million times better. Now it's a phone call to me, a 5-minute phone call versus a 5-hour, 4-hour, 2-hour lunch once a week.
My first deal was a church in Los Angeles, and I got this listing from a friend of mine, and I had no idea what to do with it. Luckily, I joined a company where my business partner now was my mentor, Filippo Fanara, and we got through this thing, and he showed me how to get it done. But getting a listing and actually servicing that listing are two completely different things. If you don't understand it, I'm going to follow up on Mike, get somebody that knows what they're doing to help you. And share that first 2 or 3 commissions, as Mike said, because you can get yourself in a world of trouble if you make mistakes. And your job is to serve your customer. And if you don't find that mentor, you're not serving your customer.
Well, just to kind of touch upon that, my father and my sister are real estate lawyers, and I hear a lot of horror stories while they maintain their client attorney privilege, and I'm trying to do everything I can to not be in that space, meaning being sued. So it is, and because it's painful, it's emotionally painful, it's draining. Again, just go up while you're still learning.
I'll maybe go in a different route, even though there was pleasant memories from the first deals. The biggest issue I faced in the beginning was not having a buyer's exclusive buyer's agreement. And I'm sure by my statistics that probably 85% of the agents do not use it. And then they're mad at the buyers screwing them over. Learn how to do the buyer's agreement, and you'll be safe. They can move on then, but you get your commission.
Yeah, I mean, everything they said is spot on. And maybe one thing I can add is, the whole goal is to stay in the game. You make a little bit on the first few, get your runway, then you can take off. But if you crash on the runway, you're done, game's over. So, I think that's the way people should look at it, and then, have a nice bright future.
Where do you all see commercial real estate in the next 5 to 10 years? And is that a good gauge for what the market looks like?
Well, commercial real estate better be still around because I'm planning to stay here. There's always opportunity, guys. You guys know that. Whether it's residential, commercial, but probably, in the next short term, we're probably looking at higher returns, higher cap rates. We talked about interest rates a little bit, and so let's talk about that. And let's talk about gasoline prices. So when gasoline hit $5, $6, oh my gosh, it's so expensive, and it is expensive. But guess what? You guys still got to drive. You guys still got to go places. So commercial real estate, whatever the price, there's always going to be an opportunity. There's always still people looking to expand their businesses. There's still investors looking to invest. There's still people looking to lease property. There's landlords with empty spaces. It's going to be around. 5 to 10 years, it's going to be around forever and ever. At least I'm hoping so. So I kind of use that gas illustration, maybe not the best, but you know what? There's a market out there.
Let's call this sales generally. So basically position yourself, at the right place because markets do change. So I always kind of compare in the residential market, or whichever market, if it's a buyer and seller market, if you're quick enough to change sides of the table, then you'll always be in a good market. So it's buyers or sellers, you just move and you're good. So develop your program. I used to teach business planning for realtors. That was before the pandemic, because I found out nobody plans their business because they don't know that they have a business. And in that business program, I have 2,200 names of people that I can actually call that I've developed over the last 20 years. So no matter which way the market goes, I am asset to those people. I know people and I can connect them. So call it commercial, or cars, or residential, or sales, or refrigerators. I still have 2,200 people I can call.
Yeah, I mean, in the next 5 to 10 years, so we held an event on crypto and NFTs and all that online good stuff. Right now, everyone's talking about the metaverse and, everything's gonna be online, and just on your headset, not go anywhere, all that kind of cool stuff. That's not happening in the next 5 to 10 years. I think people wanted it to, but it's definitely stalled. I don't think Facebook/Meta has developed as much as you would think. All that whole market is still very much a gamble, as you can see with the crypto crash. So, real assets are still very desirable and required. So, like I said earlier, at least in retail, it's right-sized and it's stabilized, and I think it's going to do the same thing in office and industrial. I mean, they're both going in the opposite direction, but I think at some point in their future, they're going to stabilize. So, I don't think it's going anywhere, and it's still needed, at least for the next 5 to 10 years. I don't know, if we're talking about 50 years, I don't know.
5, 10 years, commercial real estate, there's going to be changes. I mean, there's always changes. Is it going to be, are we going to have a group like Redfin come in and have all this data and start doing brokerage? I mean, I've been reading a lot about different companies. Amazon has more information. They're the largest commercial real estate owner. What if they started doing their own real estate and started selling real estate? They had a brokerage. And you just go to Amazon for your real estate. I think the changes are coming. We just need to see what they are and keep in front of them. But the one thing I know about commercial real estate is that it's relationships. You know your clients, you serve your clients, and they come back to you for your knowledge and your advice because they know you know the market. So I think for the next 5, 10 years, we're good. After that, who knows?
David and Alfredo hit 2 important things. I think commercial real estate, the actual physical side of commercial real estate, commercial building, the actual structures, the physical use of the buildings, and the why commercial real estate exists, and it's going to be there. We service our community. But the way we transact commercial real estate is going to change. And items they mentioned, like NFTs, cryptocurrency, blockchain is really the big one, and the metaverse, they're real. As I travel through all the different meetings I do for the National Association of Realtors and other things, we have these discussions. The metaverse is being used right now for a lot of companies to have their meetings that are transferring around. It's like Zoom. You use a Zoom, and after a while, you forget you're on Zoom, even though it sucks. You forget you're on Zoom. You're talking like you're in person. In the metaverse, we could all be sitting here like this, and having this meeting here, and you forget that you're not together because you're in this ultimate world. With the transactional side of commercial real estate, the blockchain, that's going to be huge. That's going to change the way title companies do business because property can transfer within 5 minutes because the ownership of the property and all the things that go along with that are public on a blockchain that cannot be changed. Therefore, the idea of title goes away in the sense the way it is right now, and you can transfer a property by just transferring the token. A token is like a share, and that's already happening. It's a real small percentage right now, but that's getting bigger and bigger because tokenization using this blockchain technology or this cryptocurrency, not the cryptocurrency itself, is changing the way it's going to happen. So I think what everyone's saying is you got to be knowledgeable of what's coming down the market to adjust the way that you're doing your business, keeping the connections you have with the people that you're working with every day, because that is your bread and butter. Because why are you important in the transaction? When you have things like technology companies like Amazon and Google and Apple that control all the data, and CoStar, when CoStar, by the way, now owns homes.com, apartments.com, and is controlling the residential market too. And things like you have the 3D Matterport pictures that you do in all your homes out there. That data is owned by Matterport. They control every 3D thing of every home in America pretty soon. The point is that data is there, and they're going to have that information. How do you play your role in that? In commercial real estate, we are always the consultant, the person that's taking the financials, looking at the goals, and connecting the data together with them. So that's where you guys stay strong, but be cognizant of what's coming down in the future. And I think for everybody, you need to be educating yourself and keeping knowledgeable of what's happening down in the future.
Thank you so much. Now, last question. We talked a little bit about the future. Now, tell me, what is the biggest lesson you've learned in your specific market?
Half an hour at the end. I don't have a really good answer for this, but just listen to your clients, see what they want, and stay trustworthy and honest. In the beginning, I came across a lot of different types of brokers and agents, and good and bad. And actually, you have different kinds that are all successful. But at least for me, finding and working with people you can trust on the other side was so huge. So I realized that I need to be that as well. I mean, I generally was. I'm not saying I was a fraudster to begin with, but maintaining that and understanding that what you are and how you act mattered. So that's a huge thing to being successful in the long term.
I think one thing that I learned over the years, this is words of wisdom, the old man, is it's better to have a small pool of long-term clients than to look for clients every day. I guess you need time for that. Maybe that's why I'm here, and I have clients that call me when they need something. I know my fellow colleagues here at the table, they all have a pool of clients that are there constantly bugging them with needs. And we are there to serve them. So it's way better, more satisfying to be a source for good people that you know, than just spending your energy and time looking for clients.
I'm just going to echo what everybody else says. I mean, this is a relationship business, whether it's residential, whether it's commercial real estate. You just have to be in touch with your clients, and like David said, have integrity in your business.
I think same here. Nurture your relationships. Those are super important, and be a person of integrity. I think the one thing I learned, it took me a while. I've changed over the 20 years I've been doing commercial real estate, and I think I've become more serious about it in the last 5 to 10 years. And initially it was fun. It was a fun job, and every day you'd go out and do all these cool things, and every day was different. But I've taken it. I've really started to look at it more as a career, a job. I love my job. All the people I work with are my friends. So it's great. It's great. My office is a fantastic office, and we all get along very well. It's like a family. And I've learned that in order to move forward and enjoy what you do, You really have to work with people that you like, and you have to like what you do. Because if you don't work with people you like, forget it. Find another place, because you're not in the right place. You know, find people that you can work with, you trust, and that's one thing I've come away with from this is I really enjoy what I do. I enjoy the people I work with, so I'm blessed in that way.
I think if you're going to work with land, and like you said, land is the basis of all commercial transactions and all residential transactions. It comes down to land, that you need to understand what land is. Land is dirt. And what you see is not always what it is. It's about the vision you put towards there. What you can do with that property you're looking at. And even what you want to do may not be able to be done because of the general plan, the zoning, the restrictions, the city, the politics, who the mayor is, who the governor is, what's changing over in the federal government, who the president is. All those things affect what you can do today with that piece of land. You can buy a land today for $1 million, and tomorrow it has no value at all, because guess what? You bought $1 million piece of land and you can develop this amazing thing on, but there's no water. Or that land is a brownfield and it's contaminated. And Omni comes out there and says, listen guys, the land's great, you're going to build this $10 million development, but it's going to cost you $50 million to clean it up. There's ways to get around that, there's super funds, there's all things to get around that, but you don't know what you're getting. And I think the point of that is whatever product you work with, in the case of land, it's really vast out there, you don't know what you're getting, you could be lost in a second out there because what you see is not what it is. But everything they said is what we do in our business. I believe everything you do will come back and bite you if you do it wrong or do it right. And if you do things right, you'll be taken care of. I believe in karma, and I believe that you gotta be positive out there and help others out there. But when you work with land, don't trust with what you see out there, what's being advertised to you out there, what can be done out there. You guys spend the time as being the expert in that industry, being the expert understanding stuff to give your client advice, because guess what? Even though they should be doing all the due diligence, they're relying on you. When I'm selling a house in the past, when I used to sell houses, it was straightforward. There's a database for everything. The data, there's no question about it. You see it right in front of you. You understand it. It's a house. But when I do a commercial building, an industrial building, same thing. I can see what I can do with that building. I may not work that business, but the building structure is still there. Or if doing a retail center, you know that you can continue to do what you're doing right there right now, but maybe you can do something else with it. With land, you don't know what's going to happen because that zoning might change overnight. You're not grandfathered into what you want to do with that piece of property. It's a matter of when you actually go ask for those permits. So my piece of advice for land is know the property you're working with, understand the city you're working with, understand the politics going on in that world, understand what politics are changing around it in the community, understand the utility information there, and understand who you're going to have to talk to really understand how to move things forward and hire the right people to be on your team. Because whoever's on your team is going to make a big difference as you try to make your transactions happen.
All right, well, that concludes our panel portion and our questions. If we can give it up for all of our speakers here.